I am your Godzilla of the truth in America. Hey, guess who's with me live, Washington, D.C.? Steve Bannon's War Room. We're in his basement, the studio that we've built here at the Breitbart Embassy. War Room impeachment, 9 to 10 every day, 7 days a week. With me is the King Kong of low mortgage rates, Mark Livingstone. Mark, great to have you, buddy.
Great to be here at this early hour in the morning.
First time I've been here. Up here?
I'm fired up. 7 a.m. I'm here. This is the earliest I've ever been on your show. Thank you for having me. That means we're talking to an entirely different audience.
That's right. That's why you're on here at 7, and we're at the Bannon Bunker, as we call it, the Bannon Bunker War Room impeachment, 9 to 10. Steve will be here at 9 a.m. as we try to get some messaging out from the White House on impeachment. Bannon told me a month ago Trump was going to get impeached by the House. We're like, what the hell are you talking about? And he said, well, we got to do something. And so here we are trying to fight back. So we got another Fed rate. You know, here's the thing. Impeachment sucks all the air out of the room. The Feds drop rates. It's nowhere to be found in the news.
That's right.
Isn't that amazing, Mark?
It's amazing. Jerome Powell dropped the Fed rate by 0.25% just 2 days ago, this past Saturday. Everybody saw it. It was highly expected. Now, the big thing is, if you read what he said after he dropped the rate, there had been ruminations. There'll be 4 rate drops this year, but he's made it clear that for right now, he's holding steady, keeping inflation in check right at the 2% level. Just below there is the healthy margin. Now, Trump economics, you talk about it all the time. How's it doing? It is healthy right now. Housing and jobs run the economy, John. Housing and jobs. Right now, jobs, unemployment, the lowest it's been for
50 years.
50 years. For Hispanics, African Americans, females. Overall, the unemployment rate is trucking. That's housing. Jobs, or that's jobs. But the housing is just going bonkers right now. It's doing so well. Interest rates should not be as low as they are, John. However, with what's happening, Brexit being pushed out, tariffs, trade wars, so all of that is pushing downward pressure on the rates, whereas the economy is pushing upward pressure. So Jerome Powell, doing what he does best, dropped the rates on Wednesday. The rates had already been at very low levels, the lowest levels we've seen in 3 years. However, last week when President Trump indicated that there was a phase 1 table talk on the table for China that pushed rates up a little bit. So I had customers calling me this week going, hey, rates dropped. Actually, rates are back to their highest levels that they've been since September of this year, but they're still historically low. So although they're off their 3-year low, John, we are still looking at historic rates, and it's an excellent time right now to take advantage. Home appreciation is up 53% since 2012. We have home ownership up to highest levels that we've seen in 12 years. We've seen appreciation up. We've seen tappable home equity. Overall, right now, it's $6.8 trillion. So, again, it's the Trump economics. Anyone that tells you that it's not doesn't know what they're talking about.
So you have the Trump economy, which is thriving, which is causing, as you said the other day when we talked, you said this is a golden age in housing.
Correct.
Because unemployment is at an all-time low, which means that people have jobs and they have the money and the income in order to get a mortgage, buy a home, or refi, do whatever they need to do, or buy a second home, right? And meantime, because of that, because of the demand, equity in homes appreciation has gone up.
Right.
So appreciation is up. Unemployment is down, so it's a golden age for housing.
It is a golden age for housing. I didn't coin that. I can't take full credit for that. That is a chief economist who has said that we are entering a golden era. For the first time since World War II, we're seeing unemployment and interest rates below 4%. With the builder confidence high, with the sales going up, because right now there's a shortage in inventory and housing across the U.S. in the price point of $250,000 to $600,000, okay? So what that means is that there are more buyers than there are sellers. So therefore, contracts are being, there's multiple contracts again, like we saw 5-6 years ago. So home values are being pushed up because there's so much competition to buy these houses. So that's how you get the appreciation of values. And so therefore, with appreciation of values, you have the home equity. So there's $15 trillion in home equity across the country right now. 6.8 tappable home equity. What's the difference between the two? Well, you can't take out all the money, all the equity in your house. So you can only go up to a certain percentage point. So that's why the tappable home equity is at 6.8 trillion. Tappable home equity itself is 15 trillion. Does that make sense?
It makes tremendous sense.
Okay.
So basically, what you're saying is the time to get a mortgage or a refi is right now. You're just not going to have a better opportunity.
Correct.
Rates are down, and you have appreciation. So the first thing you want to do is let's talk about a refi, right? Whatever mortgage you've got right now, first thing you want to do is check and see, are you paying private mortgage insurance or PMI?
Correct.
You're one of the people in America that if you refi through Mark Livingstone and Cornerstone, you're going to eliminate that PMI. Think about, ladies and gentlemen, what PMI is. That's like pissing money down the toilet, right? I mean, you get no value for that. You might as well take that money, what's the average for that for a $300,000 home?
$200 a month.
You might as well take that $200 a month, go on the nearest street corner with a person with a sign, or go under a bridge and just hand out the $200. You get a bigger benefit than that than paying the insurance at the bank, right?
Right. Well, going back to what I just said, homes have appreciated, and you have mortgage insurance on your mortgage when you have less than 20% equity. And it doesn't cover the homeowner whatsoever. It's covering the bank, so that if the home were to go into foreclosure, the mortgage insurance company steps in and pays the difference between what the house sold for and what the bank recovered. So it doesn't cover you whatsoever. So you're paying the insurance
to cover the bank's butt.
Yes, exactly.
Even though the bank is making money on your loan.
So now with homes appreciating,
that's like you're being a chain smoker, right? And you're not healthy, and I'm paying your life insurance, and if you die, the premium goes to your friend, somebody else. I was like, I'm just paying it for nothing.
Right, exactly. So now what we're seeing with the home appreciation that I just mentioned is people who purchased a home in the last few years, didn't put 20% down, and are paying that monthly mortgage insurance. They can now refinance because the home has appreciated to get them to the threshold where they don't need it anymore. So a lot of your listeners that purchased 2, 3, 4 years ago with less than 20% down may now qualify to refinance. And as I heard you saying yesterday, that we set our own rates, we are a direct lender. That is true. That I say all the time, we'll meet or beat anybody out there, John, because we are a direct lender. We can set the interest rates. If you bring me a quote from another company, I'm going to beat that. I want that loan.
You're going to beat it.
I'm going to beat it.
So if I go to my bank, if I go to my credit union, I go through the shenanigans, I fill 9,000 reams of paper out, they ask me 150 questions, and they come back, and that I's not dotted, that T's not crossed, then they go, right? So I go through like all that, I have to put my suit and tie on. Before I sign it, I call you.
Correct.
And you beat it.
Because we are a direct lender with our own warehouse line. We can set our rates. Now, if somebody has challenged, thank you, Godzilla. I'm the Godzilla of mortgages. And so if somebody brings us a loan estimate from another company, I like to look at that. I will check it out. I check credit, and then we will beat any other competitor out there. If you have challenged credit, if you've had challenges in the past, we will check your credit and guide you how to get that credit improved so that you qualify. Or we have investors that will lend you the money if time is of the essence. And you have challenges, we'll do a 2-step loan. We have it all.
Live, Washington, D.C., Steve Bannon Bunker, War Room Impeachment, episode, I think, 13 or so, coming up today, 9 a.m. Mark Livingstone with us, the King Kong of mortgage rates. Mark, got a couple questions here. Let's start with Pat. Says, Pat in Elizabeth City says, ask Mark, do you work with property in Elizabeth City, North Carolina?
I wish we did, but unfortunately we don't. We are licensed in literally 9 states, including California, Colorado, Georgia, Maryland, D.C., Virginia, Florida, and Georgia. However, we are not licensed in North Carolina at this time.
Okay.
But thank you.
Not in North Carolina. Let's see. We've got Eugene in Chesterfield says, ask Mark, what will the wackos taking over Virginia do to interest rates and home prices come next week?
Well, come next week, we're not going to see fluctuations that quickly within a week. However, the wackos in Virginia values will stay the same as they have been. We're seeing appreciation, like I mentioned earlier, and I think we're going to continue to see the appreciation because the lower interest rates mean that more people are getting off the sidelines to purchase, and more purchases mean home appreciation. Home values go up, and so that's the great thing, like we were talking about before the commercial break, about eliminating PMI. The lower interest rates means that you qualify for more money. The way to figure it out is for each 1,000, figure $4. So the interest rates dropping is a great thing. It's going to help push values up a little bit.
All right, Mark. Let me just ask you something. You were talking earlier about the rates dropping. Why is that important right now? If you're looking at a new mortgage or a refi, why does that matter now?
Well, if you're looking at a new mortgage or refinance, because interest rates, you want the lowest possible rate. You want the rate that's going to save you the most money, or you want the rate that's going to get you the bigger house. Like I just said, each 1,000 is $4. So with the interest rates dropping, you may qualify. If you were on the threshold of qualifying between 325 and 330, you may now qualify for a home that's worth 350, 360,000. Now that is the price pocket, John, that we're seeing a lot of competition because there is a housing shortage in many places across the country. And so what that means is that you want to be pre-approved for a loan prior to making a offer on a house. And so you need to call us at Cornerstone to make sure your credit's in line, to make sure you qualify for the maximum amount that you can if you're going to be in a bidding war. And so Cornerstone is the ideal company to get you prepared for that bidding war, like here in the war room. Okay,
that's
so that's
right.
What thank you.
Good analogy, and I understand one of our listeners
That's right.
Was able to get a good deal recently, right?
That's right. John Wilkinson, who heard us on AM 820, I think it was, WNTW out of Williamsburg, Virginia.
Right.
John is a veteran. Thank you for your service, John. And John is refinancing his VA loan to another VA loan, taking cash out in order to do home repairs, pay off credit cards, and getting a lower rate. By John doing all this, he's taking cash out. He's going with a 25-year loan versus a 30, so that he is going to be immediately paying down more principal than interest because he's taken a shorter term. And so John is one of your listeners, called me up. He was pricing out with another mortgage company. We came in, beat the other mortgage company. They weren't able to get him a 25-year. We were. We can fix terms because we are a direct lender, John. So a lot of people that I refinanced 2-3 years ago with higher rates in the mid to high 4s, I'm getting them now mid to high 3s, getting them terms that are 26, 27 years, so therefore they're not adding more life to their loan, and it just makes sense. And so John, he said he was getting up early this morning to listen. John, look forward to working with you, and John Fredericks says hello to you, John Wilkinson.
John Wilkinson, my man in Williamsburg, thanks for tuning us in, and thanks for letting Mark Livingstone save you money. I really appreciate that, the King Kong of low mortgage rates in Virginia. Got another question here?
Sure.
May I ask it? This is from Rich in Virginia Beach. He says, ask Mark, I got out of the Navy in 1994 and I've never used my VA home loan. Can I still use it now?
Absolutely, Rich. Once a veteran, always a veteran. We would just contact the Veterans Administration, get your DD 214 or certificate of eligibility, and then you are off to the races. There is a funding fee with VA loans, and if you've never used your VA certificate before, it's a lot lower than if you have used it before. Excuse me. So therefore, for example, John Wilkinson is going to pay a higher funding fee than Rich, because Rich has never used his VA loan before. But you know, John, there's so many veterans out there that aren't aware that they qualify for these outstanding VA loans. Whether you're buying a house as a veteran and you can put zero money down, that's right, zero money down if you're a veteran and you've never used your certificate. You can take cash out up to 100% of the appraised value. The interest rates are lower. Government interest rates are lower than conventional rates. So for example, VA rates are usually about a half a point lower than the Fannie Mae prevailing rate. Right now, rates are low. Rates are really low. If you're driving in your car right now and you've been on the fence about refinancing and consolidating debt or losing that PMI, now is the time, because interest rates ultimately, whatever goes up, must go down. And the old adage is rates go up like a rocket and come down like a parachute. You don't know when that rocket's going to take off and those interest rates are going to go back up. So if you've been on the fence thinking about, maybe I'm going to buy a house, or maybe I'm going to refinance and pay off that credit card debt, which is not tax deductible, now is the time to pay off the credit card debt, wrap it into the mortgage, and make that credit card debt tax deductible.
Mark, we're running out of time. People want to get more info. Where do they go?
The website, cornerstonefirst.com, cornerstonefirst.com. Or call us at 202-625-1221, 202-625-1221. I'm on Twitter at Cornerstone1ST. Love to hear from you. Love following John Fredericks. We go back and forth on Twitter. It's a lot of fun. So again, cornerstonefirst.com. Thank you, John. Have a great morning.